Here's the 30-second lesson on what legends know. Never practice nunchucks in a crowded room. Never eat chole before a road trip. Always take your shirt off before you iron it. Don't take a call near a swimming pool. And don't forget, saving is not investing. Legends don't just save, they invest in mutual funds. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Is a new Cold War beginning in the world? The previous Cold War began with, it was rooted in ideology and geopolitics. The new Cold War, we aren't quite there yet, but we might get there because the first few steps are now becoming visible. And if the last Cold War was, as I said, based in or embedded in ideology and geopolitics, today it seems to be beginning at least with trade. So there's a trade war that has begun, a new trade war has begun in earnest right now in the world. And that might then lead to a new version of a 21st century version of the Cold War, or let's say a mid-21st century version of the Cold War. So we are getting there. And what is the provocation right now? Why are we talking about it? That's because Biden administration dramatically on 14th of May announced a whole bunch of tariff increases on Chinese goods. Imports from China, and these are not just any imports, these are imports in really selected areas. So if you see this statement from White House, of which I'm sharing a copy with you as a link with the description, but also you will see it on your screens. The statement says that these are tariff increases, and I quote, across strategic sectors such as steel and aluminum, semiconductors, electric vehicles, batteries, critical minerals, solar cells, ship-to-shore cranes, right? And medicinal products. And it says the idea is to, through this, bring back reshoring. Reshoring means to bring back this production within the country. Now, one thing is that job losses have taken place because cheaper goods are coming to China. The other argument is that the Chinese now are producing too much and dumping on global markets. I will come to that because that seems to be the casus belli or the cause of provocation for war or justification for this war or for this trade war. I will come to that in just 2 minutes. First of all, let's see how these tariffs have been increased and how considerable these are. I will also tell you then the implications of this, implication in terms of numbers on trade right now, and implication geopolitically and also in terms of global trade relations. So steel and aluminum duties have gone, tariffs have gone from 7.5% to 25%, semiconductors 25% to 50%, electric vehicles 25% to 100%. So 4 times. So all the BYD cars that you get in India, those cars are selling in America as well. If those are now imported in America, the tariff will be 100%. That's a very high tariff. America does not export that much to China. It's only $195 out of a total trade of $758.4 billion in 2022. Then you see batteries, components, critical minerals, 7.5% to 25%, lithium-ion batteries, 7.5% to 25%, but not now. Those new tariffs will come into effect from 2026. Other critical minerals have gone from 0% to 25%, graphite and permanent magnets. All this stuff is used in batteries. That also has gone up to 25% from 0%. And White House statement says that, look, in spite of the tariffs that might have been put in the past, and Donald Trump tried to launch a trade war with China, but obviously this is the election year in America, and this White House statement says that what Trump administration did not succeed. That has failed. So we are doing new things in spite of whatever the Trump administration might have done in this area, that is batteries, critical minerals, magnets. In all these areas, the Chinese still control 80% of the global supply chains, and that is not acceptable. Then overall, solar cells have gone up from 25% to 50%, and ship-to-shore cranes, right? These have gone up from 0% to 25%. Again, the idea is that this production will move back to America. And then there are some interesting areas where there might be some opportunities for India as well. Syringes and needles. Those are items of very high consumption now, because you know that all needles, all syringes are now disposable for many decades now. So these are high consumption items. Syringes and needles duty has gone up from 0 to 50%. So the idea seems to be to squash any imports from China of these products. PPE, personal protection equipment, this became a very familiar sight in the COVID period, 7.5% to 25%, and surgical gloves, rubber and surgical gloves, from 7.5% to 25%. So this is quite a thorough bit of tariff raising work that Biden administration has done. And you can see that some of this is also directed at the elections, because Donald Trump has come up with his own super protectionist ideas. Except Donald Trump's ideas are not just confined to China. Donald Trump says that he will put like a safety collar around America, around American trade, by putting a 10% tariff on all imports into America. That is also something that India should worry about, because India has lots of exports to America. In fact, India's largest trade surplus of more than $25 billion is with America. A lot of that, in fact, comes from services, which is software, etc. But tariffs in those areas will take away India's competitive advantage. Anyway, that is part of the election rhetoric. We'll come to that as we go along. How much strategic strength does trade, or the use of trade as an instrument, weapon, whatever you call it, ploy, whatever you call it, has given China? In 2022, final data, China's trade surplus was $890 billion. $890 billion, how much is that? Just for comparisons, India's total trade, export, import, all included, merchandise, goods, services, all included, was $964 billion. So China's surplus was just a little bit less than India's entire trade. And you know what? Our population, if anything, might be a wee bit more than China's. However, right now, this is the announcement of a trade war. Now, why has this happened? This has happened because America, if you read all of the writing on this, all of the analysis on this, this tells you one headline. And what is the headline? That China is exporting too much stuff. It's not just producing and exporting too much stuff, it's also exporting its economic problems to the world. And what are these economic problems? These economic problems, briefly said, are as follows. That the Chinese do not believe in putting money in the hands of their citizens or consumers. So even when COVID came, most countries, the big economies in particular, America, Britain, Europe, they sent money. In fact, they sent checks directly to their citizens, consumers, so they could spend. That was also a way of driving up consumption in their markets. Also, it gave their people something to buy from, so they could sustain themselves, and they did not feel the effect of the pandemic as severely as might have been the case if they did not get the support from the government. What that did was, because this money came into people's hands, people went out to buy. When they went out to buy, the demand for goods went up. So at that point, in fact, American imports, particularly from China, ballooned. They went up so much that in many of the ports, ships were waiting to dock. So containers could be offloaded. The demand went up so much. With that, inflation went up in those countries. So that vicious cycle then set in. In China, on the other hand, the Chinese government preferred the approach not of giving money to their citizens or their consumers, but giving money to the factories and producers. So you produce more, you keep the jobs there, and they subsidize those factories. They also gave them tax breaks. They gave them cheap loans, cheap land, all kinds of benefits. In the process, they vacuum cleaned. In the process, first of all, they produced too much surplus, which was only to be exported to the rest of the world, and the price had to be remunerative, and that came in from Chinese government subsidies and support to these sectors, and also from their artificially keeping the yuan at a low value. As the dollar strengthened further, yuan stayed weak. American exports lost competitive advantage because the currency was strong. Chinese yuan was kept weak, so the Chinese had competitive advantage for their exports. In the process, a humongous trade deficit built up. If you look at the data, China, in terms of merchandise sales in 2023 had a trade surplus with 173 countries, territories, and entities. 173. It had a deficit with 50. I'd like to see which 50 these are. I'm sure some of these are just oil exporting countries, right? UAE, Saudi Arabia, Iran, like that. But with the rest of the country, with all these substantive economies in the world, China maintained a big surplus. With India, for example, on an average, China has managed to keep a surplus of $100 billion plus. In fact, last year, some of the Chinese platforms were happy to point out to Indians who were watching them that, see, this year your deficit, that is India's deficit vis-a-vis China, trade with China, or maybe China's surplus has fallen below $100 billion. It had just fallen below $100 billion, like $99.8 billion, like that. In fact, if you look at the list of the countries with which China has deficit, some are easy to understand, some are just resource producing countries. Many countries in Africa, Mongolia, these are countries that produce raw materials that China buys in large volumes because they'll buy any amount of lithium, any amount of cobalt, any amount of iron ore, bauxite, that is the ore for aluminum, from anywhere. And then they will value add it and then sell to the rest of the world. In fact, even if you look at India's meager exports to China, some of that is basically no value added stuff like shrimp paste and then iron ore and stuff like that. So China has, with many of the countries where it has a trade surplus, it almost has a colonial relationship. But even with some of the countries where it has a trade deficit, it is still a colonial relationship because it's buying in bulk commodities from there or raw materials, which it then converts into high value items. But it also has deficit and other high tech items. So Japan, Korea, Australia, I suspect with Australia, a lot of it will again be minerals. But still, these are small deficits. Chinese economy is run on a very high trade surplus export basis. That is what works for China. What is it like with America? With America, if you look at the US Trade Representative's figures for 2022, in 2022, America's total imports from China were $562 billion. America's total exports to China were just $195 billion. That made a deficit of $367.4 billion. Now, after a lot of effort, after a lot of changes, this declined a little bit. Last year, it has declined, but it has still come down to $279 billion. That's a big deficit, and that is what the Americans are complaining about. More than the deficit, what the Americans are now complaining about is job losses, and they are saying that they are losing jobs in critical areas, and the potential to create jobs in critical areas because the Chinese are using unfair practices. They are producing too much. For example, last year, the Chinese produced twice as many cars as could be consumed in China. So because the Chinese Communist Party does not believe in putting more money in the hands of its consumers, the consumer exemption in China as a share of the GDP is among the lowest for large economies in the world. They, on the other hand, build their GDP based on exports. So again, their model is to produce surpluses and export to the world. Why do we say they are exporting their problems also to the world, economic problems? Because their economy is struggling. Their economy is struggling, one, because their housing boom has gone into a bust. Housing boom has busted. We have done multiple episodes of Cut the Clutter on this. In fact, I will also share a couple with the description. The second thing is, in China, consumer spending is not going up. Savings are high, but consumer spending is not going up. Third, a lot of the debt that people had taken to buy these apartments that nobody can use because more jobs are not being generated and people are not able to repay their loans, that debt overhang has also led to the collapse of many financial institutions. All of these have led to an economic crisis in China. On top of it is the biggest crisis of all, which is demographic, which is the number of working age population of working age people in China is really going down. And as it goes down, it becomes that much more difficult to build your economy around your own people. Now, the solution to all this is just to produce more in the areas where the world wants premium products now. This is not cheap shoes, plastic sandals, toys, Diwali ka patakas or Holi ka color or little factory made idols of Hindu gods and goddesses. No, this is or Rakhis. This is not like old times. These are really high value items. And what are these high value items? The biggest premium item in the world right now is anything related to electric vehicles, anything related to alternate sources of energy, renewables. That is in fashion right now. And country after country is throwing a great deal of capital at it and a great deal of subsidies at it. So what's happening in the Western world and what the Western world is now complaining about is that, look, we are allocating all these subsidies to electric vehicles, to renewables, with the idea of slowing, if not stopping, slowing down climate change. And that is how a political consensus is being arrived at in our countries. However, if the Chinese produce all these goods in these areas and we import these, then these subsidies are actually being transferred to China. So these are subsidizing manufacture in China. So first of all, the Chinese are benefiting from this. And second, jobs which should have been created in our countries are being created in China. And if this continues, our own political consensus will break down. For example, in America, the popular opinion then might be, and that is what Trump is also now promoting. See, the other day at a fundraiser, he asked for $1 billion of contribution. This was a fundraiser with oil and gas industry. He said, you make this contribution, when I come into power, I'm going to take away everything that discourages more oil and gas consumption or exploration or production in America. So America at this point is actually self-sufficient in oil and gas. So why should they take the burden? This will be the political argument. Why should they take the burden of slowing down climate change for the rest of the world? हमने इस बात का ठेका क्यों लिया हुआ है? Why am I so responsible when I have my oil and gas? And if in the process I also have to import from China in a manner that benefits Chinese manufacturers, creates jobs in China, and takes subsidies, money from my taxpayer and gives it to China, that is something that's going to be politically unsustainable. That is the internal political argument. Now, there are three sets of readings that we recommend for you on this, and those are the three sets of readings I am relying on. One is an article in the New York Times that appeared just yesterday by Paul Krugman. Paul Krugman, in fact, was the sole Nobel laureate in 2008 for his work on new trade theory and new economic geography. So this is pretty much in his domain, and usually I find his writings a little bit dense, and sometimes I'm lost also because the American politics is so polarized that economists or specialists or scientists sometimes more like polarized politicians. This article, however, is very clear. It's written with great clarity and makes the case for Biden administration's new tariff war or tariff move that they've launched. So Krugman quotes a study. He says that, look, this change, global trade, globalization was going fine. Even in America, people said, all right, so what? What's the big deal, right? If somebody produces stuff cheap, it comes to your consumers, your manufacturers can't compete to produce at that price. So be it, at least your consumers are getting this stuff at good price. That is the essence of free trade. He said that, however, began to change. And that began to change in 2013 with the publication of a work titled The China Syndrome, which later came to be known as the first China shock. This was written in 2013 by David Otter, David Bourne, and Gordon Hanson. That first explained how the Chinese were producing these goods that were taking away jobs from America. And that work showed only 1.5 million jobs having been taken away from America in a certain period. So he said 1.5 million reads like rounding error in America because people are getting laid off or fired all the time in America. It's a hire and fire system. However, many of these job losses were in specific geographies. For example, he mentions areas in North Carolina where a lot of America's furniture was produced. Because cheap furniture began coming in from China, these areas got wiped out. So in many areas, large communities got wiped out, and there were massive job losses in well-defined communities. These ultimately became aggrieved populations and Donald Trump's new voter base. Many of them were in real America, Midwest, South, areas like that. Not so much in New York, Los Angeles, San Francisco, Washington, etc., etc. And that is what caused a political dislocation. He then explains, Krugman explains, what was the first China shock. He says, now we are saying the second China shock is coming. And I told you something about that second China shock, but I will explain it to you in just a minute. He said the first China shock was a real problem, and even generally pro-free trade economists who have no sympathy for Trump-style protectionism, now worry about the effect of rapid increase in imports. And he says the new shock, that is the second China shock. The new shock largely reflects China's weakness rather than its strength. The Chinese economy is in trouble, consumer spending is very low as a share of national income, and high levels of investment spending that used to fuel the economy in the past have become unsustainable as a declining working age population and slowing tech progress lead to diminishing returns. It's in this situation that the Chinese now overproducing and dumping in global markets. Now, what are they dumping, and why is it being called the second China shock? Because the Chinese gamed it 10 years back. Chinese gamed it 10 years back that the global concern will be about climate change, renewables, electric vehicles. So they chose these as their champion sectors and began investing big time in these, investing money in these, investing also political capital in these through many different ways, because the Chinese communist system, they do control the economy, the commanding heights of the economy in complex ways or maybe not such complex ways, because they control everything, they own everything. In fact, any Chinese factory, the party has an office there, because they understood and they anticipated this coming demand for electric vehicles, for renewables, and for anything that fought climate change. They began to prepare for this. And suddenly now, when everybody needs this, they are producing so many solar panels that I read in one of these articles that in Europe, solar panels are being imported so cheap that people are using those to make fences, right? They are so cheap. So Paul Krugman's is one article we read. The other, read also the Twitter feed of Brett Setzer. Brett Setzer is an expert. He's a senior fellow at Council on Foreign Relations. He writes about sovereign debt, capital movement. He also has a very useful and very easily comprehensible blog called Follow the Money. So read what he is writing, also hear what he is saying. On his Twitter handle, you will also find a podcast he's done, a China podcast that he's done with another expert, where he explains some of these things. And the third is this article, again you see it on your screen, and I will share a link with you, by Michael Schumann. Michael Schumann is an expert. He is the Atlantic's senior contributor based in Beijing. So these three articles and this one podcast give us all the stuff that we need on this. Now, I'm quoting from the podcast, Brad Setzer speaking, and he says, and I quote, China is exporting too much stuff. It's also exporting its economic problems. She intends to maintain Chinese jobs and factories at the expense of other countries' workers and companies to avoid potentially disruptive reforms at home. Because the idea is, and that's what Michael Schumann also says, that if more reforms are carried out at home by Xi Jinping, it might lead to political instability, because the Communist Party controls the thought, the minds, everything of all its population. This reform will involve some loosening up, which Xi Jinping doesn't want. And that is how, looking at all this data, that Michael Schumann concludes that China has gotten, and I'm quoting him, that China has gotten the trade war it deserves. And he says a global trade war is starting and China is at the center of it. Because he explains the Chinese economic model is to build Chinese industry at the expense of the rest of the world. And he gives you examples and data to tell you how well prepared the Chinese are for this. He says that at a recent Beijing auto show, there were 278 electric vehicle models on display. And so much is the demand and so much is the push for this. There isn't that much demand in China. Demand in China is much less than what the Chinese are producing. So much is the demand in terms of the exports that the Chinese are pushing, that even Xiaomi, which is a phone making company, they have also jumped into making electric vehicles. And that's the reason he notes that when Anthony Blinken came to China in April, he said the Chinese excess capacity is front and center of the relationship. He also said the Chinese excess capacity is flooding markets, undermining competition, putting at risk livelihoods and businesses around the world. Similarly, in the month of April, Olaf Scholz, the German chancellor, had come to China, and he also expressed similar concerns. And he said, and I quote, "The one thing that must be clear is that competition must be fair." Premier Li Qiang, the Chinese Premier Li Qiang, he responded by saying, he said, no, and I quote, "Greater supply is conducive to full market competition and promoting the survival of the fittest." And then Xinhua, in a commentary, really thumbed its nose at the Western world, at China's competitors, by saying the world does not want less of China's capacity but more, because it says that if you demand less of China's capacity, that ignores, and I quote again from Xinhua, that ignores 200 years of basic concept of Western economics of comparative advantage. That means if we have comparative advantage, this is free trade, we will take advantage of it. What has happened in the process is this Chinese aggression, this Chinese trade aggression, with care, I'm also using the expression greed, because they don't want to invest at home. They don't want to build their own markets. They don't want their own people to consume more. They just want to produce, subsidize, produce, and dump it across the world. This has now threatened the global trading system. And this has threatened globalization as well. So in country after country now, pressure is building up to deglobalize, at least to decouple from China, or decouple from those economies which have the ability to control supply chains across the world. And we are seeing a lot of that in our country as well. And when the new government comes, you will see a lot more of this happening. The Americans have sounded the bugle. A new trade war is on already. Already on strategic issues, there is tension between China, most of its neighbors, including us, and the Western world. So if you combine the two, you can see the storm clouds of a new Cold War building up in the world.